And welcome back, everyone. Money Show would like to welcome Jake Bernstein, publisher of the Jake Bernstein Online Weekly Capital Markets Report and Analysis. Jake is an internationally recognized future analyst, trader, and author. He's written more than 41 books, numerous research studies, and newsletters on futures trading, stock trading, trader psychology, and economic forecasting. Jake, always a pleasure to have you. Thank you for joining us today. It's all yours.
Thank you very much for having me. Thanks for the Money Show being here and proactive to deal with the situation, this unprecedented situation that we have in the markets and in the economy and in the world. So wherever you are today, tonight, or whether it's tomorrow where you are, thanks for being here. I'm speaking to you today from my home in the Santa Cruz Mountains, California, where I have been sheltering in place for the last 93 days. 93 days. So, not to contradict anyone who has presented previous to me or who will present after me, I'm going to give you some advice. Don't day trade. The good news is day trading offers many opportunities. The bad news is most people don't know how to do it. They don't have the stamina to do it. They don't have the information to do it. They don't have the money to do it. They don't have the ability to do it, the techniques, the methodologies, and so forth. In my humble opinion, there is more money being made selling day trading software than there is in day trading. Take it from one who knows. I wrote the best 4 day trading books from McGraw-Hill. I'm not interested in day trading. It ain't what it used to be. When you're day trading, you're trying to predict the unpredictable. There's nothing worse than trying to predict the unpredictable. You've probably heard it here, and most people say, I just want to make $300 a day. I just want to make $500 a day and then I'm done. Take it from me. You don't want to make $300 a day. You want to make as much darn money each day as you possibly can. So if you're quitting when you've made your 300, it's a wonderful thing. You'll be right 6 times in a row. And then the 7th time, you lose it all back plus more. If you haven't been there, you will be there. If you have been there, you know what I'm talking about. So something really refreshing today. I have nothing to sell you. I have no software to sell you. I have information for you. I'm not going to ask you to send any money, to sign up for anything, etc. Look, the bottom line is this. We know how free webinars work. I'm not going to do what most people do. I'm going to teach you something today. If you can learn this, then that's a wonderful thing. I feel I will have achieved my purpose in the 52 years that I've been trading, above and beyond the money that I've made. So what's in it for me? Here's what's in it for me. If you learn something from me that changes your life, your trading life, or your future, or you take my advice and don't day trade, it's not for most people. You can't do it. Send me an email. Tell me that I've changed your life for the better. I will die a happy old man. So consider, people are out of work, they're sheltering in place, they're sitting at home and they're saying, what am I going to do? They see the ad for the brokerage firm. It's on TV. A man sitting in front of a computer and he's looking at a chart. The world around him is collapsing. His refrigerator isn't working. Neighbors are yelling and screaming. A guy's knocking on the window wanting to show him his new barbecue, his lawnmower. But the guy is happy. He's trading. And the ad says, don't get mad. Get even. Get day trade. Get E-Trade. Start trading. The bottom line is this. As you know, if you've been there before, it ain't that easy. And most people who sell software will tell you it's easy. They will tell you, I was speaking at a webinar a couple of days ago where the day trading software seller told people they would be right 97% of the time and make $3,000 a day. That's absolute rubbish. It's not true. It's not going to happen. Don't be a sucker. Excuse me, I'm a little passionate about this. Which is not to say that I don't day trade. I will day trade if the opportunity presents itself, but those opportunities are few and far between. Most money for most traders in this market environment will be made on short-term trades, 3, 5, 7, 9 days, and on the longer end of the spectrum, 6, 7, 9, 10 months, a year and a half, and so forth. Consider the plight of the average trader. Never traded before. They're grist for the mill. They'll be chewed up and spit out immediately. They go to the internet and they say, I want to search on Google for teach me day trading. They come up with 80 million hits. OMG, 80 million hits. And most of these will be glad to teach you how to day trade for a price. Strongly suggest you don't do that. So in 30 minutes, I can teach you many things generally and poorly, leaving out important details and saying, you want more information? I will be glad to sell it to you. Choice number 2, I can teach you a couple of significant things, which I will try to do in this short period of time. But better yet, this. I will give you a free webinar. There's going to be a link. It's going to be an hour or two. And I will show you exactly what I do and how I do it in greater detail than I can do today. So if you get the recording, you can see some of the things that I've done in my career. I've taught all over the world. I've personally mentored hundreds of traders, been on CNBC, Wall Street Week, CNN, FNN, Forbes magazine, you name it, I've been there. I'm a real trader. I trade what I teach and I teach what I trade, but I will not tell you that you're going to be right 95% of the time or even 80% of the time. So jot this down or click the link on the lower right. If you go to that link, you can register for my free webinar, and that's going to be on Sunday, June 21st from 4 to 7 p.m. But let's go on at 4 o'clock Central California time, 7 Eastern. So here's the deal. If you can come away from my session today learning one thing, it's the list that I'm going to show you right now. It's time to grow up and look in the mirror and ask yourself this question. Before you make a trade, do you know everything on this list? And there's 2 pages, essentially 19 things. If you really want to make money and you really want to be honest with yourself, you will find a method or know a method or develop a method or learn a method that gives you the answer to every one of these questions. If you don't have, and I respectfully submit this to you because I'm a real trader and I know what I'm doing, I respectfully submit to you this. If you don't know the answer to every one of these questions before you make a trade, your probability of lasting success is slim to none. I want to know what stock, forex, or futures to trade, when to buy, whether to buy or sell, the exact time to buy or sell, my odds of success, my average profit, my average loss, my stop loss, my risk, my profit to loss ratio. Am I making more when I'm making money than I'm losing when I'm losing money? The complete track record as far back as you can get history. Your average profit, your average loss, the maximum profit or loss that has ever been produced. The maximum drawdown, in other words, how many trades in a row to the maximum dollar amount has it ever lost money? The maximum upswing, what's the best it's ever done in a series of trades? The number of consecutive losses, and this one is the most super important right over here. How many times in a row, historically, has this strategy lost money? Why is that important? Look, the bottom line is this. It's all about psychology. Most people can't handle losing money more than 3 times in a row. The first time they lose money, they figure, hey, it's not a 100% game. It's understandable. I'm losing money. I'm going to do it again. They do it again, they lose money. They're saying, hey, 2 times in a row I lost money. I'm not happy. But I'm going to do it again because I have discipline. They do it again. They lose money. They say, okay, this is no fun anymore. The guy on TV looking at his chart and being happy, did he have to go through that? The bottom line is this. If you backtest and trade strategies the way we have for many, many years, you will know that many, in fact, most really good strategies will lose 6 times in a row before they become successful. Most people can't handle 6 times in a row. It's not going to happen. They will lose their discipline. You want to know the maximum number of consecutive profits, the accuracy. How accurate has the strategy been? Someone can say to you, we've been right 80% of the time. Meaningless. You can be right 80% of the time and still lose money. Because if you're losing more money 20% of the time than you're making 80% of the time, you're still behind the 8 ball, excuse me, even though your percentage odds look good. You want to know how to maximize your potential profit and minimize your potential loss. You want to know when to move your risk tolerance effectively to 0 and run a trailing stop. You want to know when to exit your position, and you want everything to be crystal clear. So look, I don't do candlesticks. I don't do charts like this. I don't do indicators like this. I don't do fundamentals. I do fact-backed, rules-based trading. Excuse me. So if you're looking at a chart like this, forget about it. Most people have no idea what these indicators do or where they came from. You will not make money with a chart like this. Forget about it. So what do we do? I'm going to spend a lot of time telling you what I don't do. What do I do? I only teach fact-backed, rules-based trading. So let me go back to that. Fact-backed, rules-based trading. What do I mean by that? Okay, we're going to look at some rules. We're going to look at some seasonality. We're going to look at a trading model. And most of all, please don't be stupid. Okay? How do you avoid being stupid? You avoid being stupid by asking questions. So whatever strategy anybody shows you, I don't care if it's me or anybody else, ask the questions. Look at the list that I gave you. It's pure gold. It's the best thing you can have. If you have, look, of those 19 things that I showed you, if you have answers to 10 of them, you've got answers to 10 questions more than 99% of everybody out there has. Thousands of day traders are coming into the market every day at Robinhood or something like that. They will lose their money. I've seen it 100 times. Don't be stupid. Don't be one of those people. Remember, futures and Forex trading is a zero-sum game. For every winner, there's a loser. For every loser, there's a winner. The bigger the pot, the more money the professional traders have to share, because that pot is going to consist of stupid individuals who don't know the rules. So just because it looks good on a chart doesn't mean it's going to be good. What most traders don't understand is that trading is a business. People do things in business that make sense and money, but when it comes to trading, they gamble. They don't have a system. They figure, all I need to do is sit in front of the machine and the money's going to come to me like a little money printing machine. It's not going to happen. So let's go forward. Second most important thing I can teach you is right here. Every trade, no matter what trade you make, even if you pull it out of the thin air or you pull it out of your you-know-what, if you evaluate every trade on the basis of these 3 factors, you will be successful in the short run and in the long run. It's called setup, trigger, and follow through. Setup. Every trade has to have a pattern. The good news, there are thousands of patterns. What's a pattern? Chart pattern, head and shoulders, moving average crossover, RSI, stochastic. These are all patterns. The question is, do they work? In the old days, before computers, you could tell somebody something works, show them a couple of charts, and they'll be happy. We can't do that anymore because we can put it on a computer and ask the question, does it work? Good news, there are some that work. Needles in a haystack. The bad news, 90% of them are totally worthless, never have been worth anything, never will be worth anything. So all of these things you see in a chart, forget about it unless you have the hard numbers. Once you have a pattern and you've proven that it works, you need a trigger. Trigger is what most people call a timing indicator. I will show you some triggers and some patterns. Number 3, follow through. Follow through consisting of 3 things. Number 1, where are you wrong? Where do you take your loss? Number 2, where do you take your first profit and get out of danger? And the most important, number 3, follow through. How do you take that small trade and turn it into a big kahuna? You will not be successful taking a few $100 out of the market every day. You will be successful if you can take that $400 trade and in a matter of 3 or 4 days, turn it into a $4,000 trade. And the good news is there are purely objective ways to do that. Let's talk about good sense and nonsense. People talk about the 50 and the 200-day moving average, the golden cross when the 50 crosses above the 200, the death cross when the 50 crosses below the 200. There's opinions all over the place. If you watch CNBC, suddenly the news reporters from a few years ago have suddenly become market experts. They talk about the golden cross and the death cross, the 200-day moving average. Do they know the facts? They've got opinions. Here are the facts. If you go to the computer, the ultimate arbiter of what's correct, and ask the question, how often has the 50 and 200-day moving average been right? The answer, 48%. You can do 50% by throwing darts. The average winning trade in Dow point and S&P points has been 490 points. I'm sorry, has been 906 points, but you've had to wait 492 days to make that money. What trader can hold a trade for 492 days? If it's a losing trade, they will be glad to hold their trades till they grow hair on them. If it's a winning trade, they'll be out really quick because they want the day trade. So you take the track record, it's pathetic, and you say, okay, well, let's use more data. Let's go back even farther, and the results are even worse. Worst of all, this golden cross, death cross strategy has been wrong 6 times in a row. And as I told you before, after the 3rd time, most traders are done. They're ready to trade something else. So compare. Let's take another strategy. A 4-day pattern, which we use, not based on judgment, no interpretation, back tested on the computer, completely clear rules, profit target, without a maximizing strategy, just a raw strategy right over here, track record. 85% accuracy over the course of 645 trades. Average profit, you say, oh, only $267? That's right, because the average holding period is only 2.5 days. 3 consecutive losses, and this is what you want to see, 26 maximum consecutive winners. Now that's a different strategy. That's what you're looking for, and you want the equity curve to look like this. So am I going to sell you this strategy? It's not for sale. You don't need this strategy. What you need is a specific strategy that's going to work for you and not keep you sitting in front of the stupid machine all day. Let's talk about something else. And I'm going to elaborate on this at the free webinar. We can look at the numbers, blah, blah, blah. We can look at patterns. And let me go through this. Okay, so look. We have very powerful tools called computers and software. All we have to do is use them. And when we use them, let's talk about something else. One of the best books ever written on trading is called The Behavior of Prices on Wall Street. The Behavior of Prices on Wall Street by Art Merrill. If you've never seen this book, if you've never heard of this book, go get it. It's way out of print, but it's worth looking at. Art did something truly phenomenal in the 1950s. He noticed a pattern, and that pattern was this. He noticed that the day before a major US holiday, the stock market, measured by the Dow Jones, tended to go up on the day. So he did some research. He looked at all the major legal US holidays: Thanksgiving, 4th of July, Memorial Day, Christmas, New Year's, Easter, Good Friday, blah, blah, blah. And he compiled some statistics. We're not talking opinions, we're talking statistics. And Art discovered that on average, 75% of the time, the Dow Jones closed higher on the day before a major holiday. That probability could only happen by chance once in 10,000 times. So we weren't dealing with an opinion, We weren't dealing with looks like the market wants to go up. We're dealing with a fact. How do we change that fact and adapt it to a real strategy? The answer was real simple. Thanksgiving in the United States is always on a Thursday. You buy on the close of trading Tuesday, get out on the close of trading Wednesday, you use a specific stop, and you generate a track record that looks like this. It's called the pre-holiday trade. 62 years, 73% winning trades. The rules are completely mechanical, no interpretation. But of course, you know what people are going to do. They're going to say, well, it's not going to work this year because why? Because we've got COVID, because we've got Trump and he's an idiot, we've got this, we've got that, we've got conflict. Forget about that. We are all about the numbers. But we can do something else. We can go to the computer and ask the question, is there a pattern that begins before Thanksgiving? Easy answer. The computer gives us this. I do a search. I go to the computer and I ask the question, for S&P 500, beginning on November the 20th and ending on December the 1st, so we're covering that broad range of time that encompasses Thanksgiving, and ask the question, has there been a pattern that's been successful? When does it begin? When does it end? What have been the odds and so forth? Now here is an example of what I'm talking about. Buying March S&P futures, end of day, November the 20th, every year since the start of trading. Every year, getting out, close of trading, December the 4th, risking 3% stop, close only, has been right 81% of the time. Remember, we're not guaranteeing the future, we're asking the question. Has there been a pattern? And lo and behold, here's the pattern, here's the complete track record. And remember what I said. If anybody shows you a strategy, ask the question, show me the numbers. Don't show me the last 3 charts. Don't cherry pick the charts. Show me the numbers. What's the rule? When to get in, when to get out, etc. Very, very simple. So, think about what I said before. Does it tell you whether to buy or sell? Does it cover everything of those 19 items on my list? Yes, it does. And this was the track record last year before the trade happened. There were 100 reasons to not take the trade based on interpretation, fundamentals, and feelings. We don't trade based on any of those. We trade on facts. Here's what happened. This was the result. This was the complete track record every year. And here's the graphs. Here's what happened. Entry date, exit date, profit, target hit, stopped out on trailing stop, the trade is over, made our money, completely objectively, no interpretation whatsoever. Then you may say, but you missed this big trade over here. No, we didn't, because we don't have just one trading strategy. Our other trading strategy caught this trade. Has there been another one? Well, we go to the computer and we ask the question, show me trades historically based on the numbers, not on patterns and interpretation, in the S&P 500 for the month of December that's been correct 80% of the time or more, that's had a duration of 15 days or less. So I get to choose and use the most powerful tool we've got, the computer. The computer crunches the numbers and says, yes, here's the trade. Buy March S&P, close of trading December 22nd, get out, close of trading January the 7th, average profit, average loss, percent average profit, percent average loss, maximum consecutive wins, etc., 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 78% accuracy. And remember, 78% is not 100%. Yes, there is a risk of loss in trading. So what happens? And remember, we knew this trade before it happened, and in just a little while, I'm going to give you a trade before it happens. This was our first trade seasonal, and this was our second one. Did we miss this move? No, we got it with another methodology. So all we need to do is do some research. Here's another trade in February, but let me show you the best thing. Here we go. Fact-backed, rules-based trading is what we do. And let me show you a chart. If I took all the Dow Jones averages, the chart for every year from 1920 to 2019, ladies and gentlemen, we're talking here about 100 years. And I made one chart that looks like the average. Added all the charts together mathematically and made one chart. This is what the chart would show me. So remember, we're talking about opinion. We're not talking about opinions, we're talking about numbers. The bottom of the chart, percentage of time up or down by week. On the chart, the trend. This was the trend for April through 2019. Go back and look at what happened in April. We have something coming up in July. It's right over here, the first 2 weeks of July. And by the way, if you want to know more about this, go to seasonaltrader.com. The chart says there has been a strong tendency for the Dow Jones, S&P, and so forth to go up first 2 weeks of July. And here is what the chart looks like right over here. Can we take this bit of information, go to the computer, and get some real numbers? Here's the trade. Computer, for S&P futures, search June and July and find me trades that have been right 70% of the time in that month. Give me the details. And here's your trade. Buying S&P futures September, June 27, close the trading, getting out July 1st, 76% accuracy, and the complete history right over here. Of course, you're going to say, well, wait a minute, Jake. It's been working too well. It hasn't lost money once since 2010. It's not going to work this year. It's looking too good. It's definitely not going to work because Trump's an idiot and so forth. So what about COVID? We don't care about COVID. We don't think about the fundamentals. We're strictly technical traders, fact-backed and rules-based. So here's the most important rule. If you can't test it, don't trade it. That's number one. Number two, many strategies are intentionally vague and subject to interpretation in order to make them difficult or impossible for you to test or understand, which allows certain unscrupulous people in this business to tell you stuff that you don't need to begin with. So don't become a victim of that trap. If you can't test it, don't trade it. What I've tried to do during this period of time is to give you some specific information on fact-backed, rules-based trading. I taught you the essential trading model. I showed you how we take that trading model and put it into practice. And this is just one way in which we do it. So bottom line, you don't need expensive software, but you do need to have those 19 things that I talked to you about. If you can get those things and you can put them in the structure of a trading model, you can be successful day trading, but it's extremely difficult to do. You need to take big positions for small moves because the moves are generally small. And remember, with much of day trading, the behavior during the day is random behavior. If you're trying to predict random behavior, which by its very definition is unpredictable, you're trying to predict the unpredictable, which, pardon to coin a term, is mental masturbation. It's not going to work for you. So I invite you to attend the webinar. No sales pitch, very simple, good information. If you have any questions, there's my email, jake@trade-futures.com. I want to thank you for being here and wish you the best of health and the best of wealth and the best of wealth. I don't have time to take questions now, so I'm going to turn it back over to the Money Show. And thank you for the opportunity to be here. Stay safe, stay healthy, and remember to social distance. It does work. Thanks very much, Money Show, and everybody have a great day.